Here we go, another update on DraftKings Incorporated, symbol DKNG, listed here on the NASDAQ. Stock has been holding steady, as you see. Came down to about the top end, mid 30s, and then since has been climbing up and really trying to hold this recent support level that we drew out. Again, this was from the bottom of August 5th, 24. Looks like we touch right there August 13th. We touch right there November 4th, and you can see that we had a couple of bounces over there, and that's why we dropped, and we consistently tried to reclaim. Look, going up to this fib here about 43.16, we reject, retest the 20-day, immediately bounce back, and look at that, multiple tests basically right back to that trend line. So in my opinion, it appears to be in this upward channel, making higher highs and higher lows. So in theory, it really should reclaim this support trend line and potentially come up to the top end of this range here. You can see we also have earnings coming out soon next Thursday. Analysts expecting a loss of about 16 cents on revenue of 1.4 billion. So again, when I first looked at DraftKings a while back, I think it was like here, we were talking about, no, it was even before that, maybe it was like here. But everyone was pumped about the stock, but I felt it was overvalued, and I wanted to wait for the revenue to start coming in, and then it starts chunking up 700-800 mil, as you see. So I started to get a little bit more bullish personally. And then, of course, as of late, we break above the billion-dollar milestone, and earnings since hitting this billion-dollar mark have been kind of mixed over the last couple of quarters. But in my opinion, overall, I think everyone kind of sees the writing on the wall, that there's just more and more business flowing into DraftKings. They're consistently expanding their footprint, and most analysts, I believe, are pretty bullish on this one. But this top trend line here, this is our top resistance level, and you can see we're back above 70, looks like around March of 2021, and then I come down and I touch those tops there of March of 2024. And you can see that it tried to quickly break up and out back in December of 24, about 3 months ago, and immediately rejected and came back down here right about to this fib and then bounced. And you can see it's a little sloppy here, basically since this earnings back in August, but technically the stock has dropped down. It's trying to reclaim support, and it's technically making, as I said, higher highs and higher lows. So technically still bullish. And you can probably see a run up, maybe about 44 going into these earnings. And if people are expecting this to be a potentially breakout quarter, you could see a breakout up and above this top line resistance level, which would probably bring us up to the very high 40s, if not 50. Stock has 52-week high here, 49.57. But you can see even if they want to break it up quickly and retest this top, and then double top it to drop it back down, you can see you're looking at high 45s, maybe right near 46. So this could potentially be a good play over the next couple of days going into next week. If you did want to ride the wave, of course, I would say, like a lot of people do, you could jump in maybe on some cheap calls, ride the wave up on the pump, the anticipation of the earnings, and then you can secure some profits and maybe just leave a couple of runners, with the house money and see if it breaks up and out. Or, of course, you can secure profits going into earnings and then reposition yourself into some calls or some puts, depending on what you think earnings are going to look like. But, yeah, those are the numbers we're expecting. Sitting here with a $20 billion market cap. EPS, has been kind of sloppy the last couple of quarters. Again, revenue jumped up to $1 billion. Seems to be holding about that 1.1. And for the year, what are we looking at? 1.1, we lost 1, so about $1 billion. 1.1, we made 63 million. 1.1, we lost 290. So, on track for about four-ish, maybe 4.5 billion total revenue, with what should be either a slight loss or maybe even slight positivity. I know people are pumped. We got the Super Bowl coming. And then, of course, after that, you have March Madness, right? Going into March. So there's always something going on, which is why this is a decent stock to own. I mentioned that it would hold up well through the years coming out of the lockdowns. It's pretty defensive. Look at that debt just holding steady. About 134 billion for the last couple of quarters. Cash technically was higher, but it's sitting here at a touch below 900 million. So the debt only outweighing the cash just by a couple of hundred million. Short-term assets and liabilities neck and neck. Long-term assets outweighing liabilities. So if we look here, we're at, yeah, maybe about minus 400 million. And we come over here, we can see our equity was at about 1.3 billion, drops down to 800 million for a couple of quarters, and now we climb back up, technically down from 2 quarters ago, but we're still sitting here at over a billion. Book value per share 221, so we're trading at like 22 times book. So depending on which metric you want to look at, you could probably make the argument that it's either overvalued or undervalued. But in my opinion, I just see the business growing, and revenue, again, consistently for the most part coming on the up and up year over year. So I guess I'd probably give them the benefit of the doubt. But we were at, what, minus a couple of hundred million. We got a billion equity. I got to recheck. See, I started talking, I forget. Yeah, minus 400 million. Okay, so that would bring us to about plus 600 million. But we brought in like 4 billion something. Right? So now we're at like 4.8, almost 5 billion with a little bit of loss. So you can put quote unquote fair value of the business at maybe even like 4.5 billion, 4.5 to 5 billion, market cap 20 billion. So we're trading roughly 4x, quote unquote, my personal fair value, which again isn't too crazy. But you can see analysts also are pretty bullish on it. Price target maintained 60 a share by Needham. Again, there's always something coming. We have Super Bowl Sundays almost here. We have, again, March Madness. Price target cut to 51 from 55 by TD Cowen. Again, still above 50. That would shoot it up and break it out above that resistance trend line. Moffett-Nathanson trims price target to 58 from 60, keeps buy rating, right? So slight trim, but still pretty bullish, looking for, yeah, it's about a 30% move from these levels, 42 to 58. So this is what I mean. Everyone kind of sees the numbers growing as we're seeing them. And that's why I feel that most of these analysts, even the last time we looked, were up in their price targets into the 50s, some holding $60, $65 price target, maintain positive. Susquehanna price target, again, even though it was cut a few dollars, it went from 56 to 54. So you can see everyone's still looking for like 10, 12, 15 points more. Price target maintained 44 by benchmark. Yeah, that's pretty conservative. That was exactly a month ago. And we're basically at that level now. Maintain market perform by JMP. Price target, again, look, slight cut from 52 down to 50, but that's still a nice chunk above where we're currently trading right now. So DraftKings, again, you could kind of make the argument either way. Of course, we have to wait and see what these earnings show us, because I'm probably expecting a run up again here to about the 44, maybe even slight breakout, 45 going into earnings, and then it's really out of our hands, right? And if the company happens to report, another mixed rough quarter, you're going to see the rejection and you're going to start pulling back into the high mid-30s. Of course, if you happen to see, oh yeah, we only lost, 7 cents a share and we brought in 1.47 billion revenue, right? If you see a report like that, boom, you're going to break up and out. So again, unfortunately, earnings are a gamble. It's out of our control. And again, we've seen some mixed guidance even as of late, right? So for all we know, DraftKings could beat nicely, and we could reject off this line if they issue some weak guidance or something. So we'll have to wait and see. Again, those earnings coming out next Thursday. But in my opinion, should probably go up before, possibly pulling back going into earnings. So that could be a quick little trade for some people out there. Let's look at stock charts real quick. RSI, about 58 on the daily. Yeah, we were on the up and up. Again, had the slight retest here, mid-Bollinger Band, breaks below the 50-day moving average, bounces right back. Top Bollinger Band, 43, 41. Again, top line resistance about 44. MACD was on the up and up. Looks like it's potentially flattening out. So again, might just remain like flat Monday, Tuesday, and then maybe start climbing Wednesday going into Thursday earnings. We'll have to see. You can see, look, 3 weeks, 3 black weeks, white weeks, I guess, I don't know, green weeks, however, whatever color you want to use, but up, right, for 3 weeks, reclaiming that 50-day and bouncing and climbing nicely off of it. And look at the top Bollinger Band on the weekly, 44, 45. So that's why I think, in my opinion, I think it goes to that 44 level going into those earnings. 50-day moving average, 39.67. And again, we were looking at the drop right to the other fibs and the trend lines. If they report weak, 38, 36, and you can see bottom Bollinger Band here on the range, 35.5 roughly. So that might be your downside. RSI on the weekly, a touch below 57. MACD recently crossed to the upside, which is probably what's helping to keep it bouncing off of that 50-day and remain bullish. And again, we have earnings coming up soon, so people are pumped. People, they buy into a stock a week or two before earnings. They play the run up, they play the earnings. Last year's pivot point looks slightly above 45. So again, that's why I was saying you could potentially break up and out quickly above that resistance of 44, and you can even tap like the 45, 45.5 range, and then see that quick rejection to come back into the range going into earnings. But again, you have to kind of play it day by day. Pivot point here on the weekly, 38.57. So again, like that 38 range, you can see a lot of action if it wants to pull back there. On the daily, it looks like this previous support level of last month was just above 43, and you can see that's kind of right where the stock recently went to, and it pulled back slightly. So you're probably, in my opinion, going to see that break up getting above this previous pivot point on the way to this one, 44.75 on the daily. So you can see a lot of action in like the 38, 37 range here. Support level 37.55 if we drop down, and you can see a lot of price action taking place up here in the 44, 45 range. But again, probably in my eyes going to go up to those mid 40s right there going into earnings, and then it's out of our control. But overall, they are growing nicely, and it could be hard to time from quarter to quarter, so I can appreciate your frustration. But I will say this, as we've seen over the last several months, this again was a big drop to sub 30, and it clawed all the way back to over 40, which is why once I started seeing the revenue coming in, people in the Discord, even people on X can attest to this, because I've mentioned a couple of times in the past that now with the new revenue coming in, anytime I would see DraftKings drop to like 37, 36 and break that 40 level, I would most likely mention that I like DraftKings here at sub 40. I think it's on sale. I think you should buy calls, in my opinion. I think you should buy shares. And then you see how it always bounces back, right? We drop down back to 36, break the trend line, sub 40, and then boom, we bounce right back up to 40 plus, right? So that's how I've kind of been playing it personally, DraftKings with the options. But again, to each their own. But if you have a strategy specifically for these DraftKings earnings, let us know down in the comments if you're feeling bullish, if you're feeling bearish, or if you might ride some calls like we speculated up over the next couple of days and then sell and then maybe straddle, right? Buy some calls and buy some puts and then just wait. So let me know what your personal strategy might be, and of course how you personally feel about DraftKings, both in the short term and in the long term. Because, again, 20 billion could be viewed as a little high in the market cap, but technically the business is growing, and myself and most analysts across the board still remain bullish on it. So I still like it. But that's pretty much it. I'll end it there. Once again, Stocks by the Numbers. Thanks for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.